Hello, good morning, everyone. Welcome to the Sensa Edge. Today, we are diving into the game changing movement in the AI world. You guessed it right, China's DeepSeek AI. This isn't just a headline, it's a seismic shift that's rattling big tech, especially NVIDIA and other chip stocks. What's happening over there? DeepSeek R1, a revolutionary AI model, was released just a few days ago by a small Chinese research firm. Let me bring up the screen and we're gonna deep dive there. So, as we dive into this remarkable story of DeepSeek R1, again, unlike any proprietary models, the open source nature of R1 allows researchers and developers worldwide to continuously improve its performance by retraining it on the diverse datasets. This flexibility is a game changer in the AI space, enabling unparalleled adaptability and scalability. The accompanying technical paper, which DeepSeek R1 also published here, I'm going to bring that up, is equally groundbreaking, detailing how such a powerful model was developed at a fraction of the cost of its competitors. By opening its model and methodology to the world, it's quite amazing what DeepSeek has come up with. And here's what is making the news. It delivers OpenAI level performance, which is comparable to GPT-3 or GPT-4. It's completely open source and open ways, meaning anyone can reproduce it. And the most amazing thing about this is it was just trained for $5 million, a fraction of the hundreds of millions that OpenAI and others spend. The low-cost innovation has flipped the AI industry upside down. These implications are massive. So that's what happened, and the NVIDIA's had a 17% down yesterday. So NVIDIA's earning growth is at risk. If DeepSeek efficiency gains are real, which we think so, demand for NVIDIA's high-cost GPUs could nosedive. China isn't just catching up in the AI, it's leading the charge by making high-performance AI accessible and cheap. So what's happening over there? And what could be the big thing over there? So DeepSeek release has drawn comparison, compare going from all the way from the horse to an electric car. Big tech companies like OpenAI, Microsoft, and Meta, who spent like billions building this AI infrastructure, are scrambling to understand how this was possible and what it means for the future. And the best part and the kicker here is DeepSeek R1 wasn't even the main project. The company, when it was DeepSeek came up with, the company is a quantitative trading firm, and this breakthrough was a side project aimed at optimizing their GPU use. Again, we can imagine what would have been like if this was their main project and what the future could hold for DeepSeek. Again, back to the screen here, and then we can jump into a little more details. So why does this matter? The question here is the massive R&D budgets what big tech companies have been like placing. It raises a concern about how AI's future dominance might shift away from a proprietary models to what open source wants. And for traders like us, it creates an opportunity to rethink strategies as market leaders like NVIDIA face volatility. This is one of the most exciting developments in AI we have seen in the recent times. How do we turn this knowledge into actionable strategies? Let's jump into that. All right, can I get my screen here? All right, so again, right, we could dive into puts, we could dive into calls, but it necessarily not be the best strategy at the present. The realized or the actual volatility is very, very high on NVIDIA due to the sell-off yesterday. This means that blindly buying puts is very expensive. There's also the minor idea that making a bearish bet on something that's already like 17% down might not be the best idea. Buying a call to play the bounce exposes you to volatility, crush. So let's look at a bearish butterfly spread. It's a great way to profit from a period of instability with a simultaneous decrease in implied volatility while keeping your risk in check. And the strategy, here it is, I'm bringing up the screen. It's long put butterfly. Again, it's a combination of bull put spread and a bear put spread combined to form a put butterfly spread. The result is an inexpensive bearish method which has a favorable risk reward ratio. Again, the beauty of bearish butterfly is that while you're waiting on the trade to play out, you're theta positive, earning money while waiting. You can also dial in the risk to your preference and even dial in your directional preferences. So let me bring back my screen on SensaMarket and build this particular strategy and how best to use it. Bringing up my screen here in a minute. All right, SensaMarket, as we have seen and spoken about in the last previous episodes, fintech platform designed to simplify option trading for everyone. It's be it a beginners, be it a pros. There are about 100 plus pre-built option strategy. You can pick any of the strategy, build this, visualize, and then trade. It's got like option flows. It's got institutional. You can look at the politician trades, insider trades, and so forth. So let's jump into the bearish butterfly, what we discussed. So I'm going to go to option strategies right here. I'm going to make this a little more bigger. I'm going to long put butterfly, as you can see here. I'm going to pick that up. And if I come here, I can see on the left panel, all those 100 plus strategies. I can certainly or easily change any of the strategies. I've already picked NVIDIA. $118, which was down close to 17%. And this is where the expiration date is. I can change and pick any of the different expiration date. Long put strategy, we are buying a put, we are selling a put twice, and then buying a put again at a higher strike price. So let's try to build this from the beginning. So what I'm going to do here is I'm going to pick something like 30 days out, February 28th. I'm going to go for $120 put, and I'm going to sell 2 puts at around $100 and buy one more long put at a lower, which is $80. And as you can see visually in this particular range, right? I'm going to repeat this again. I'm buying a put, $80. I'm selling a put twice. You can see that number -2, and then buying at $120 put again once. So this creates a bullish strategy. The profit zone right around $100 strike price. If NVIDIA hits and hovers around this particular strike, the 2 sold puts, which is at $100, are fully in the money. And the 2 sold puts provide a nice chunk of premium, while your long puts, which is $120, are fully in the money. And the lower put functions as an additional hedge against the short options. Why it works now? The put butterfly can be customized heavily, allowing for certain risk amounts, directional basis, and targets. You can dial the amount of time yourself. You can shoot anywhere between $30. You can go to like $38 or around 52 days of expiration. This is a good news. Will give this news time to play out, time for the market to digest, reprice, and time for new money to come out and the other money to flow out. Right, back to this thing again. So I'm gonna go back here, $80, and I'm gonna adjust the range again. You can see this. I think you're able to see this particular range for sure. I'm gonna bring up myself here as I speak. So $120 in each of this particular strike price. If I tap on that, I'll be able to see this is on February 28 expiration around the quote of $10.40. This particular selling a put is around $3.08, which is about like $1.50 or so each, because this is 2 puts, and buying a put, which is $80 put, around 70 cents. So altogether, I'm looking at a net quote here. If you can see the mid price debit made $4.97 multiplied by 100, that is approximately the debit needed to enter this particular option trading strategy, 496. What it has done is you're spending around 496 for the spread, and the maximum profit of NVIDIA when it is at strike of close to $100, you're looking at a maximum profit of $1,504. So the break even here lies anywhere between this $84, $85 to $115. That's where the profit margin lies. And that's where you're betting that NVIDIA, based on this particular news, is going to be bearish and it's going to hover around this particular price range in the next 31 days. And since you have buy a put of 80, you have hedged this, the maximum loss is going to be just about the debit you have put in, which is $496. Many traders will take profit even if the underlying reaches the short strike rather than waiting the entire expiration. But that's, as we say, it's pretty much the trader's choice. So this easily you can connect to the Tradier brokerage here. You're good with this particular strategy. You can connect the Tradier brokerage, like I said. You can tap on the place order button. You can see this in the summary, and then hit the submit button. All right, I think to wrap it up, right, with China's DeepSeek AI release, NVIDIA stock has gotten the ever-loving heck knocked out of it. A bearish butterfly spread lets you bet on the continued but not extreme downside. If NVIDIA's holds steady around, like we saw in the graph, $85 to $115, this trade could pay off nicely. Next time, we'll dive into the new AI platform or a new particular strategy. Be sure to subscribe, leave a review, and follow us on the platform. Trade safely and allocate responsibly. Thank you all. Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.